Welcome to our weekly training, starting here for Retire Early through Real Estate Investing Group. Joanna Wright here, founder of Bottom Line Wealth. I have weekly trainings that I like to bring to you guys so that you can take this and run with it all by yourselves. There is some additional help that I offer. If you guys need help, go ahead and reach out. But I just wanted to, okay, I thought I was on mute. Anyways, so here we are. Today I really wanted to talk to you about money, time versus money. And, what do you have the most of? This is how, when I first get a hold of a client, or even potential client, someone's trying to say, how do I get started? I like to figure out what your time versus money is, right? Do you have more time or do you have more money? And in that quest, I'm thinking, okay, you don't have the time to do, all the things that a full-time investor does. Here's how this is going to work, right? If you don't have the money to, lay out 150 grand, go buy an investment property, here's how this is going to work, right? So neither one is wrong. It's just, where do you start? Time versus money, right? That's the leverage that you're looking for. And we can always make more money. That's one thing, but you cannot make more time. So, but in the same breath, I did have a client that when I first started coaching, that had a birthday party almost like every weekend and couldn't do all the real estate things he needed to do in order to move forward. So he was not very successful because he did not make the time to do what he needed to do, right? And nor did he have the money. So he didn't have either, right? The time or the money. So that particular person is stuck on the hamster wheel of going to work every single day and just the insanity of it all, right? The definition of insanity is doing the same thing every single day and expecting a different result. So the result is he's never going to stop being on the hamster wheel. And so once I realized that, I really had to deep dive into people's lives and go, where is your time and your money? Let's make this happen, right? I have gone so far as to create 15-minute calendars for my clients. You could do something here, something there, like if time is really an issue. Or some people think time is an issue because they spend, the evening sitting in front of the TV for 4 or 5 hours and then go to bed, right? That 4 or 5 hours, you could be making a difference in your life, doing something productive. Anyways, I'm not here to hoard on anyone's time and how they use it. I'm just saying I need to know what it is so I can best serve you, right? So this training is going to cover some of that today, and to serve you in an indirect way of knowing, hey, if I have some money, and you might be thinking, well, Joanna, I don't have hundreds of thousands of dollars to invest in real estate. And that's okay. You don't need hundreds of thousands of dollars. Actually, you don't need any money to invest in real estate. But that's, again, the leverage of time versus money. So let's jump into it, okay? Let me share my screen here. Time versus money. So basically, in this particular training, I wanted to really emphasize what it looks like. Let's look at the time part of it first, and then we'll jump into the money part of it. My goodness. So if I can, let me stop sharing for a second here and see if I can mute that. It just is going to keep going. So we'll turn that off. Ta-da! All done. Anyway, so or not. Okay, so time versus money. We want to really dive into what it looks like. So if you have like 10 or 20 plus hours a week, looking for a property and speaking to sellers, really having that interaction. You can actually do one full Saturday, right? And then a couple hours during the week for follow-up. So it just depends on where you're at. Okay. So let me pull you guys up here with that. Share my screen. All right, I got you. We're back at it. Distractions and notification. I have a new computer, so I don't know where all the different things are. So anyways, time versus money. And I don't know if you guys can see that or not. I'm just going to go ahead and read from here and stop share. All right. So what do you have? Go ahead and type in the chat if you have a lot of time, like you're bored. You are super bored and you have all the time in the world because you just sit in front of the TV all day and don't do anything. Like, how many is that? How many people is that? Not very many people, I'm sure. I'm just teasing with you guys because I want you guys to see and hear what that looks like. Okay. What that looks like is, oh my goodness sakes. We're going to ignore that. What that looks like is, maybe I can do 15 minutes here, maybe do 15 minutes there. I get it. I do have a client who has, very minimal time. So we've put minute slots. I learned this because I had another client who was, working full time and a lot of overtime. So she would have to get like done in her bathroom breaks, either looking at property online or texting back a seller or calling or something on the break. So there are several ways to do this, to hustle it on the side, or you could be full time if you have the time to invest on a regular basis and learn my creative ways, right? Learning my creative ways is the number one way to do this because you're doing it with no money and no credit. You're ditching the bank. So to be able to do that is pretty powerful. It makes you limitless, right? So if you go to the bank and they say, well, you can't have more than 4 properties because your debt to income ratio is maxed. Well, how do people have thousands of properties if the debt to income ratio, you think they're all bazillionaires? No, they're not. So on a teacher's salary, you can own thousands of properties. And it's sad that teachers don't make that much, but you guys get the idea because teachers really just don't make that much at all. And they have the highest level of service in the industry, in my opinion, that in first responders. So how do they manage to get thousands of properties, right? So I use my teacher story. I do know a teacher that has thousands of properties. I could back this up. But what I'm saying is not because he had the money. It's not because he had the money. So teaching you these creative ways, you can be limitless. And while we're speaking about that, let me just go over this now that has stopped the training here. You could literally take a whole Saturday to knock some things out and then a couple hours during the week for a follow-up. I mean, it could be that simple, right? Or if you spend time every single day. So what I do is I get up first thing in the morning and I'm looking at my market. What's going on in the market? Are the properties up? Properties down? Are they sideways? Like, is there 20 more listings on the MLS or is there only 5? So what is going on in the market? So learning that, just really just diving into that for 15 minutes makes a huge difference, right? You could also leverage this with my REI lead generator. So the REI lead generator system is a huge, huge benefit. It's like having an accountability and personal assistant at your beck and call. So basically it's your website, and people click on there to get a cash offer. They fill out the seller form, get notified, hey, someone filled out your form. And there's a whole email campaign that goes out saying, hey, Bob, I saw you filled out this form. And then it goes from there. I mean, it takes it to every single step, right? And then it takes it through my creative offer that I have my clients use, so that sellers say yes 86% of the time and don't want to speak to any other sellers. So having this system is a huge leverage of time, right? Huge leverage of time. The other way you can leverage your time is speaking with a realtor, right? You could leverage a realtor, but typically it's not the best deal. And here's why: because realtors don't know how to invest. 9 times out of 10, and I hate to say this, it's so stinking true, that most realtors don't even know how to do real estate investing. They just know how to comp out a property. They'll find stuff that fits your criteria. You buy it, they get a commission. The skill set of the typical realtor, I'm not saying all of them, so don't get offended. I am a licensed realtor in California, and I do not take offense to this because I did not know. They do not teach you this in real estate school. To get your license, it's all about ethics. It's all about the consumer. It's all about the acts, the Dodd-Frank Act, and keeping people safe. That is the majority of the trainings that you get as a realtor. You have to seek out specific guru type investing strategies. Okay, so don't think your realtor is going to know what you need and want entirely. There are some out there that are really good at this. I do have realtors in my program, multiple realtors making multiple 6 figures in their industry, but they do not know how to do real estate investing. They always give all their leads to other investors. So I help them keep the leads and close on them themselves and build their portfolio. So that is one of the big things that you could leverage your time. A typical person would call up a realtor and say, hey, I want to invest in this area, and here's my price point. Here's my criteria. And then they'll say, hey, are you pre-approved? And then you send over the bank's pre-approval letter and they go, oh, okay, or is this all cash, right? So that puts up a wall immediately to most investors that need to be creative. So you'll need to educate your realtor in your creative ways. And in doing that, it's really difficult to get to the seller's story because you have to train the realtor to ask the seller certain questions. So if you could speak directly to the seller, it's a whole lot easier to close on deals. A realtor, because they don't understand and they're trying to be the professional, they just shut down, because a confused mind will shut down, period. That's how it works. So working with a realtor is a way to leverage if you're going to do typical purchases. That's fine. Or if you're selling a property, that's great because they have the max leverage they have their space in the real estate world. Don't get me wrong. I'm not knocking realtors. I'm just saying, if you're working as a real estate investor, here is some leverages and here are some disadvantages. Okay. So if you're actually going to be out there yourself, you're going to need to have a little bit of personality, right? And I have fun with my clients. They take a Personality Plus test. You can go to Personality Plus, Google it, Personality Plus test, and just Google it. It'll pop up. Take the test. It takes about 2 minutes, and you'll realize the type of person that you are, right? And this isn't bad or good either way. It just helps you to understand how you are as a person. And once you learn these personalities, you can see how others are and then be able to relate with them a little bit differently. So I'll give you an example of that. Is one of my clients, he's actually phlegmatic, right? And that's kind of the chameleon. Like he'll be fine in any situation. And he just adapts to it like a chameleon does, right? But also, if he gets with a choleric, who is very dominant personality, they're going to dominate the conversation, and he's just going to go, okay, you're the dominant. And he's just going to be that phlegmatic, you know, kind of passive, but he also mimics the choleric as well. So he takes control, but he's not in control, right? Does that make sense? Okay. And I also have another client. She's a sanguine, and very boisterous, very outspoken, asks a lot of questions, which is great because as a salesperson, you need to ask a lot of questions to get the details to make a diligent offer, right? So great personality. And then the melancholy person is totally like the back end, very organized person. We go over all of this in my training, in the sales psychology portion of my training, because it's super important to know how to speak to people and understand their personality. Once you understand that, you can adjust your personality to kind of mirror them a little bit and go and take control, but not look like a dominating control freak that most clerics are that don't understand personalities. Anyway, so it's super fun to know there is nothing wrong. There's nothing right about these personalities. It's just is. It just is, right? And this goes back to the Roman days, Greek Roman days of, Colosseum back in the day. This is how all this was created. So this is very scientifically backed, that we all have some sort of personality. So have fun with it. Just, take it with a grain of salt and use it to help you create better relationships, right? Because that's what real estate investing is all about, is relationships, building team and relationships. Okay, so let's look at the money side real quick. The money side of this, in most cases, is a $25,000 buy-in. So I've had participants of 25,000 in a couple of different ways, right? So you could do, well, I'll get into that for a second, but it doesn't have to be 25,000. So I've actually had a money lender do $2,000, right? So in a particular deal, the deal needed to close, and it was needing $2,000 in order for it to close, to pay off something. So in my example here, it's like an earnest money deposit, right? So if you put down $2,000 as an earnest money deposit, I know in California, it's more like, $10,000 plus, but just work with me on simple numbers here. This particular transaction was $2,000. And so it was bridge money, is what you might look up, is bridge money, right? So being a money lender on an escrow that just needed bridge money, which means the start of escrow started and they need $2,000 in order to close it. So at the close of escrow, that's when you get paid the $2,000, because the equity of the property is going to pay that note off. Okay, so I'm not going to get deep into it. This is, just the 30,000 foot view of how this works. But the return on investment is dramatically different between the two, as you would guess. So if you did 4% on 2,000, would be totally different on 4% on 25,000, right? Like, you get the math. Okay, so so it's dramatically different. Okay, the simple version of a money lender, I'll give you an example here, is, typically 25,000 to 100,000 or more. We've had builds of 500,000, right? From one investor. Who was that? Anyway, so I'm sorry, I was thinking back to a couple different deals I did. But let's just say let me give you an example. If you had a multi-million-dollar project, and you needed the down payment of, the lender's going to handle the rest of it, the commercial lender's going to have the rest of it, and then you're going to have a buy-in of like $500,000 investors to land in a property, an apartment building, let's just say, right? So that's how that would work, is you would need multiple investors, and obviously even more at 25,000, right, to reach that $500,000 buy-in, right, for the apartment. So there's so many ways to structure this. So I'm trying not to get granular with you guys and confuse you, because the confused mind will shut down. I'm giving you examples of how I've used money, how other investors have invested with different projects that I've been a part of, and just a sample of how this works, right? So you can have it secured by a deed of trust and insured, right? So insured and I can't say that, secured by a deed of trust. So you're actually on the property. So this is like a single family home if you joint ventured, and you would be the bank. You're secured just like a bank would be on that property, right? And you may get interest only payments for maybe the first year or two, and then it's going to pay out within 5 to 7 years, right? Or it could be shorter, or it could be longer. This is just an example, right? Or it could be the sell or refi of the property, right? So there's so many different ways that you can work this. You get paid monthly with the interest only payments, or it could be paid at the sale or refi of the property. So you're not working with, a monthly situation. You're just going to get the whole bulk at the end, which really helps the investor who might be flipping it, let's just say. And so when they refinance it, all that equity pays off the note plus interest. So it was a lot easier to work the property in that fashion. So there's all different types of ways. So these are just simple examples. So if you have any questions, type it in the comments, let me know, because I know this can be confusing. Do you want to be a money lender, or do you want to be a full-time real estate investor? You could even be both, really, to tell you the truth. I've done money lending. I've done wholesale, fix and flip, buy and hold, and money lending. So all different ways to work real estate. Currently in my short-term rental that I just created. So I really love real estate because of its creativity and all the different things that you can do. So have fun with this, right? Don't just take it verbatim here. If you just want to keep receiving checks, this is another way that some of my investors work, is they're like, just send me the money every month. I'm like, okay, when do you want it to stop? And they're like, I don't know, never-ish. So I'm like, okay, so my investors just get paid every single month, regardless of the projects that I do, right? And that's tied to LLC, bank account, escrow. Again, everything is creative and structured differently with each project. You have interest earned every month, but it's not tied to a property. So again, but the checks just keep coming on autopilot, right? Again, you have the bridge money, such as $2,000 earnest money deposit, or $30,000 in California terms, where you're paid back in 30 days, the close of escrow. The equity in the property pays it back. So I got a little ahead of myself earlier. And here's what it could look like. Let me just give you a visual and lay this out for you guys. Okay. These are the 4 exit strategies. As I mentioned, you can wholesale, fix and flip, buy and hold, or be a money lender. Those are the 4 exit strategies that you get to choose from. The top 2 is the active investor, and that's the time part of it. That's going to take you time, right? Obviously, wholesale being the most time, and then fix and flip, and then buy and hold is some time, but not much. It's mostly money. And then obviously a money lender is completely one of the more passive versions of real estate investing, but it has nothing to do with anything else but money, right? You're the money lender. And some people use this as a ladder. They'll start from wholesale, right? They'll start from wholesale, graduate to fix and flip, and then do buy and hold, creating the monies here to do buy and hold, and then ultimately be a money lender. So it's up to you how you want to work this, but hopefully this visual gives you an idea on how real estate investing could work for you. Time versus money, or as it sounds here, it's money versus time. So again, if you guys have questions, anything that you want to go over, let me know. I'm happy to review this with you. The question to you is, do you have more time or do you have more money? Let me know. If you want to leave it in the chat or send me a direct message in the Facebook Messenger, that's fine too. I can tell you how to get started. So thank you for chiming in with our weekly meeting here, and we'll see you next week for our weekly training. Have fun. Bye.